it's really, really important for people to understand, particularly right now, the difference between a market peak, peaking, or peaked, and how you do that and what it means. So, Greg, I know you want to jump in on this. So before Lucas tries to steal your thunder, can you sort of explain the difference between those three terminology? And perhaps even tell us where are we at the moment in the market?
Sure. Firstly, as you said, it's very important to understand the difference, as you said, between peak and the peak rate of growth. So when you get people out saying, "Oh, everything's peaked, that's it, it's over, things are over," that's not the case. There's a very big difference. So yes, the peak rate of growth has decreased. So when we look at that in context, March last year, per month we had between 2 and 3%, maybe even higher, where prices increased to at their peak. Thereafter, the rate of growth, so the peak rate of growth reduced, but the overall rate of growth has still continued to grow. So that's the differentiation between peak and the peak rate of growth. So yes, the peak rate of growth has, I think we've reached that last year, but the peak hasn't been reached. And there's a few key things to determine that.
All right, well, tell us.
Okay.
Share with everyone now, those of you that are joining us live, or if you're watching the recording, I think Greg's going to give you some pearls of wisdom. So really focus here. There's a couple of key ways. And again, this is all about how you can take back that control that I spoke about at the start, and how you can really try and drive forward, understanding what you should be doing. So Greg, hit us with it.
When a market has peaked, now typically the way to determine that is when we see negative growth over a consistent time period. So for instance, if we see, the shortest time frame would be a quarter. So if we get consistent negative growth and over three months, so over a quarter, we can then determine in that particular location that in theory, the market has peaked.
So Greg, the reason for saying at least a quarter, I'm guessing, is that there can always be some anomalies, some fluctuations month on month. You want to see a consistent 3-month period.
You want to see at minimum a consistent 3-month period where you've got negative growth. So that every month, then you can say, well, the market has peaked. What's quite important though, when we look at history though, usually when you peak, you get a bit of leveling off or slight reduction, but overall, it's always followed by growth. Again, it's cyclical. So it's not, even if the market has peaked, it doesn't mean let's all panic and go crazy. It's a case of, right, these are the signs the market has reached its peak.
All right, got it. And what are some of the factors what are some of the other factors that people should be looking out for to help them determine, other than just seeing the hard data, what are some of these other tangible things that people can be looking for?
So before you start seeing those consistent things, there'll be a few things. There could be some policy related to interest rates. So we've spoken about these over the years, that the bank might put in some more, or the Reserve Bank or the regulator might start putting in some factors. So policy related factors in terms of interest rates and whether you can get credit or not. So when we see a tightening of that starts going, well, hang on, that is an issue. We can look at market factors. So are there more properties being listed? Is there less? What is the stock levels? What is the housing affordability now at this particular stage? And then economic factors such as, what's the job market doing? Have wages sort of growing? What is actually happening? When those sort of three things are there, those movements in that can then start determining, are we reaching a point where we're going to see a peak in the market?
Okay, great. And I mean, I guess as well, I'm not sure if you touched on it, but obviously, every state, every city, every suburb is at a slightly different pace and has different factors that drive into it. So I guess you can't just look at it as a whole. You've got to drill down to your particular area, don't you?
You look at certain areas like the mining boom areas. You've got Perth, you've got Darwin, places like that. They'll go through a crazy increase and then it'll peak and then it'll drop like crazy because they've got other factors that determine that. So you've got to be very specific on where we're looking at. So we look at the overall, but generally speaking, you've got to look at, if you're looking at Melbourne or you're looking at a particular area, have a look at those factors will determine whether you think the market, where we feel the market has peaked. Certainly hasn't yet. There's no doubt about that. So, you know, it's not time, as I always say, now to fall in a heap and think we've, you know, if you're a seller, we've still got some good growth there. That should happen.
So, Greg, I'm putting you on the spot. When are we
Yes.
when are we predicting Sydney, Melbourne are going to peak?
I think, you know, probably later this year, early next year. That's what they you know, the people are predicting. We're starting to see a slower rate of growth, and once that reaches a certain point, we can then say we think it's going to peak later this year or early next year. That's probably where it will be.